Hello everyone, and welcome to this presentation of Trading Candlesticks with the Pet D. Welcome, my name is Stephen Primo, the President and Founder of Specialist Trading, and thanks for joining us today. In today's webinar, I'm going to give you a great technique for ramping up your odds for success when trading with candlesticks. Candlesticks, we found out through the years, are probably one of the most popular ways in which to trade, in which to look at bars within their trading, regardless of what market and or time frame. But it's our opinion at Specialist Trading that most traders trade them incorrectly, and that's why they have difficulty in showing nice results with them. So we're going to show you a great tool that you can add on to your candlestick trading. You don't have to change anything except add this one tool, and you'll really, in our opinion, ramp up your odds for success. Now, before we get into today's presentation, I ask that you please take a moment to view our disclaimer. I am going to show you a lot of performance results using this technique with candlesticks, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please take a moment to view our disclaimer. And once again, while you are doing that, I also want to make another announcement. I'd like to invite each and every one of you to follow us on Twitter. There's our handle right there at SPCLST. TRADG. We post a lot of great free information on a daily basis. In fact, just a couple of days ago, we posted that a couple of our signals had generated buy signals in the markets. And as of today, I think we have nearly a 15-point gain, depending on how you would have taken the trade. At the very least, if you wanted to trade the most conservative way in which to trade these strategies, you would have broken even on the trade. But if you just trade them regularly, I think the minimum you would have gotten was a nice 10 or 12-point gain out of this trade. So we post a lot of great information on not only stocks or E-minis, but on the Forex markets as well as daily market wisdom. So feel free to join us at SPCLST TRADG. Another thing I'd like to mention also before we begin today's presentation is I know a lot of educators like to give presentations and take questions during the course of the webinar. I like to take my questions at the very end. It seems to flow a lot smoother that way, and oftentimes if you just wait for a slide or two, your question will be answered. So if you happen to get a question that comes along during today's presentation, kindly remember it, and we'll get to it at the very end of today's class. It'll be maybe just in about 20 minutes or 25 minutes from now. So just write them down and wait. I'll answer one question, which is probably the most popular. Is this being recorded? Yes. We record all of our weekly webinars, our educational webinars, so you can study them and use the tools that we give out on a free basis. So if you want a recording of this, if you're not able to stay the entire time, please feel free to, if you see there in the bottom right-hand corner, you can contact us or I'll give you the information. I see right there that it isn't posted. We'll post up that information where you can contact us and request a link to the presentation. All right, so let me start out by just kind of going over a little bit of the philosophy of Specialist Trading. We are first and foremost an educational company. If you've come to any of my presentations on a weekly basis, you'll know that I'm all about teaching traders how to trade. It's not so much about telling you, well, we have the perfect strategy or the system and just all you have to do is take these signals. It's a turnkey approach and you'll do fine. I really don't believe in that methodology. We feel that you have to become a part of the process. This is what was taught to me when I first started trading on the floor some 37 years ago, and this is what I teach to all of my members and students in our courses. You have to become a part of the process. Why? Well, it's been estimated that roughly 80 to 85% of all traders ultimately fail. And when we say fail, it really means not that you go into a small loss or a drawdown. It means that you give away all of your money. All of your trading capital that you reserve for trading, you ultimately will lose. And so we want to steer clear of ever having to get to that point. And what you need, in our opinion, is sound education. Because what most traders rely on is an outside source to tell them what to do. All right, either this can be a system saying, tell me where to buy or sell. It can be somebody in a trading room or chat room and you're just mimicking their trades. It can be someone on TV or just any other outside source, an indicator even, telling you, well, now I have to buy, now I have to sell. We want you to take these bits of information with a grain of salt. Some of them are highly valuable, but be that as it may, you are the person who's going to make the ultimate decision whether and how you want to take the trade. So this is what we teach. This is our core philosophy. This is what turned my trading around. I have a very difficult time when I first started trading almost 37 years ago. So this is what turned my trading around, and this is what we hope to instill in all of our traders. Once again, my goal is to teach you, not to trade for you, not to tell you where to buy and where to sell, but to teach you how to spot these different strategies, how to spot these different setups, how to spot these different tools so that you can trade with the specialist edge. Okay, so having said that, once again, if you happen to come into the presentation a little late right now, this is being recorded. You know, the email that you received, you can contact the person there or call the number and we will send you a link to the recording. Also, if you happen to have any questions, just kindly wait till the last 10 or 15 minutes of today's presentation and we will make sure that you get all of your questions answered. All right, so why don't we begin? Remember, simplicity equals consistency. We do not want to overcomplicate our trading. We want to keep things as simple as possible. So let's look at how we can trade simply and easily. Let's talk about candlestick patterns. As I said earlier, they're probably one of the most popular ways in which to trade. I know so many traders who just rely solely on candlestick patterns to tell them what to do. And there's nothing wrong with that. In fact, one of our best strategies is a candlestick strategy, which has to do with a certain pattern. But let's have a refresher course and look over the majority of candlestick patterns that people use. Anywhere from a doji to a shooting star to a hanging man to an evening star. But I feel that one of the most popular and often misunderstood of all of these patterns is the engulfing patterns, okay? Both bullish and bearish. So let's talk about those. Let's just focus on this for right now because what we're going to be teaching you today really will apply to every type of candlestick pattern. But rather than go through all of them, and share with you an entire basket of all the candlestick patterns, let's just talk and focus on the engulfing patterns for right now. Now, just a refresher course, engulfing patterns are a two-bar pattern. As you see here, bar 1 on the left and bar number 2. If we're looking at a bullish engulfing pattern, bar number 1 is a down day where it opened higher and closed lower. So you see that dark body is the range from open to close. Bar number 2 is an up day, meaning it opened at a certain point and closed higher. So what we want to see in an engulfing pattern is the body of bar number 2. In other words, from open to close, engulf the body of bar number 1 from open to close. In other words, an up day's body totally encloses the bar number 1 downward body. We're not concerned about engulfing the extreme high or low of the wick. We only want to engulf the body. And why is this so important? Because this is a great pattern, it's a great edge that usually, since it's a bullish engulfing pattern, bar number 2 is an up day, we will continue for the next 3 to 5 bars in that direction. So this is a great edge to know if you see this that most likely there's some nice odds in your favor that we're going to continue in that direction. Now conversely, if we want to see what a bearish engulfing pattern is, once again it's a two-bar pattern, bar number 1 and bar number 2. In this case, bar number 1 is an up day where we open and then close higher. Bar number 2 is a down day where we open and close lower. Okay, we just want to see bar number 2's open to close range totally engulf bar number 1's open to close range. And we're not concerned about engulfing the extreme high of the wick and the extreme low. We only want to engulf the open to close range, body range. Okay. Now, why is this so important? Well, if you see this pattern, the odds are in your favor that you're going to continue in a downward direction, the direction of bar number 2, for the next 3 to 5 bars. Once again, a great edge to have in your trading plan. Okay, so let's see what the standard definition of engulfing patterns are and how most people use it and how conventional wisdom tells us to use both bullish and bearish engulfing patterns. The engulfing candlestick pattern is a reversal pattern, usually occurring at the top or bottom of a trend. Okay, so this is the way, you know, we've been taught in which to trade engulfing patterns. In other words, if the trend is going lower, you want to look for a reversal or a bullish engulfing telling you that that downward trend is going to stop. Conversely, if the trend is moving higher, we want to see that we're going to get a bearish engulfing pattern. And remember, this pretty much applies to most candlestick patterns. I would say the majority of all candlestick patterns are reversal patterns. So this pretty much applies to all of them, but we're just focusing on engulfing patterns for right now. Now here's the only problem. Let's look at this example in CVX. As we can see here, we are in a downtrend. Obviously, we've been going lower, and so we want to look for something that's going to tell us that the trend is over. And voila, here it is. Here is a bullish engulfing pattern. Conventional wisdom, all the courses we've taken, all the seminars, all the CDs we've purchased tell us this is a buying setup. We've got to buy, all right? So you jump in and you buy, and then look what happens. All right? Does that look familiar to anyone? Or let's say you jumped in, you got stopped out, you take a relatively large loss, but you say, well, you know what, maybe I just didn't study the material correctly, and you wait until you see that the second part of this trend has ended, and once again we see a bullish engulfing pattern. So maybe you jumped the gun a little bit too early. This is where the trend is going to end, and so you jump in and buy again. After all, it didn't work the first time, but it's probably you're going to make all your money back on the second try. So you jump in and buy again off of the bullish engulfing pattern, and we even go lower. So now you've got two major losses on your hand, and this is the reason why we feel most traders trade candlestick patterns, and in this case engulfing patterns, incorrectly. So how do we increase our odds for success? If we're trading them incorrectly, how do we use these candlestick patterns? After all, the majority of people do use them in some form or fashion. How are we supposed to increase our odds for success? Well, instead of using candlestick patterns as reversal patterns, these patterns will have a higher level of consistency if you trade them in sync with the trend. Let me repeat that again. They'll have a higher level of consistency if you trade them in sync with the trend. So you see, what we've been looking for is to try and basically to pick a bottom of a downtrend and to pick a top of an uptrend. And in my 37 years, I have learned that that is a recipe for disaster. At Specialist Trading, we have no techniques, no methods, no strategies that ever call for picking a top or a bottom. This is a recipe for disaster. Eventually, it's going to come back to bite you, and you're going to give back everything you made. It can work maybe for 3, 4, or 5 trades, but on the next trade, you'll most likely give everything back. And I'm not saying this out of arrogance or trying to put people down that trade this way. I'm saying this from firsthand experience because this is the way I used to trade, and I couldn't make a dime. In fact, I traded this way for a number of years until I didn't think I was going to be trading on the floor of the stock exchange much longer. So my mentors taught me the same thing when I'm teaching you, is that there is no consistency in trying to use these techniques for picking tops or bottoms as reversal patterns. You will have a higher level of consistency if you trade them in sync with the trend. Now, here's the only problem. Everyone knows you're supposed to be in sync with the trend. It's the first thing you're taught the very first day you begin to trade. Everyone knows, well, yes, the trend is your friend. We've heard all this stuff before. So then why don't more traders make money? Why aren't more traders successful? The reason is, in our opinion, is because everyone and their brother has an idea of what the trend should be. Some people say the trend is based off of indicators. Other people say the trend is based off of patterns. Other people say, well, no, the trend is based off of fundamental news, when news comes out. Some people say it's based off the tides of the ocean. It doesn't matter. Everyone has a different idea, all right? We have an idea as well, something that I was introduced to on the floor that has really worked tremendously for me over the past 30 or 40 years. That's the PET-D. This is the tool I told you in the very beginning of the presentation. We have a tool that can really increase your odds for consistency. So what is the PET-D? It's just a color bar algorithm. It's proprietary, but it's a color bar algorithm, whereas if you have a series of green bars, the green bars indicate that the short-term trend is up. And conversely, red bars indicate that the short-term trend is down. So it's that simple. There's nothing to figure out. There's no news to follow. There's no specific patterns to look for. It's automatically done for you. So how do we apply this then to our candlestick trading? All right, if you want to trade a bullish engulfing pattern, however you want to trade it, I don't care how it was taught to you in your course or in your books that you purchased or the seminars you went to, only buy if the engulfing bar, which is bar number 2, or both bars, bars number 1 and 2, are colored green. Okay, that's it. That is your confirmation that you can take the buy signal from the bullish engulfing pattern. Now, conversely, if we have a bearish engulfing pattern, if you want to go short, all right, it does not matter what the rules are for using and applying the bearish engulfing pattern, but we're only going to sell if the engulfing bar, or bar number 2 of that 2-bar pattern, or both bars are colored red. And that's it. There's nothing to figure out. There's nothing to, come up with some great Fibonacci numbers or anything. That's all we're looking for. So let's look at stocks. Let's look at some current examples of stocks and show you exactly how this would work. Here's a chart in GoPro and coming into the beginning of September. As you can see, the stock has been rising. So at this point, conventional wisdom tells us, well, we've been in an uptrend. What we're looking for is some type of reversal. So you naturally will be looking for a bearish engulfing pattern. That's not the way we trade now. Remember, we want to teach you to be in sync with the trend. So we have a bullish engulfing pattern. Most people would probably bypass this and say, well, no, don't take it. We don't want it. We want to look for a topping pattern. Forget about tops and bottoms. Once you see a pattern, regardless of what type of candlestick pattern it is, it could be a doji, it could be a piercing line, it doesn't matter. But once you see one, you want to see what the trend is. And all you have to do is apply the PET D, and we see here that all the bars are green. So if this is a bullish engulfing pattern, which tells you it's a buy setup, well, then you have the confirmation to go long. And as we can see, it was correct. The pattern worked. It was correct. Why? Because you were in sync with the trend. Now, as we get to this point in the chart, we see that we have a little resistance. We're kind of stopped the uptrend for a while. Is it the top? Well, according to the way you've been taught, yes, it is, because we have two bearish engulfing patterns here. But now that we've applied the PET D, in order to go short, either both bars or bar number 2 of that 2-bar pattern has to be colored red. Are they red? No, they're both green. So this tells us we're not going to take this short signal. We can either stay long, we can move our stop up, but either way, we're not going to go short. The trend is still to the upside. And as you can see, it went higher. So you see, when you're in sync with the trend, candlesticks work tremendously better. How about NFX? Okay, now we have, obviously we're in a downtrend. All right, at this point, you're most likely looking for a reversal the way you've been taught, looking for a bullish engulfing pattern. But what do we find here? We see a bearish engulfing pattern. Well, this is strange. I thought we're going to be looking for a bottom. We don't care about bottoms or tops. All we care is once we spot a pattern, we add the PET D, and since this is a bearish engulfing pattern, it meets the requirements to go short. We can use this as a sell setup. And it goes down a little bit lower, not much though, so we're wondering, well, was this the right thing to do? Maybe we are bottoming out. But guess what? We have another bearish engulfing pattern. So the market is giving us two clear signs that it's most likely going to go lower. The trend is red, and we're getting bearish engulfing patterns. So that's telling you, not some outside source, not some guy on TV, not some pundit, not somebody in a trading room or a chat room, but the market itself is telling you the trend is lower, and you're getting charting patterns, candlestick patterns, telling you that we're going lower. So you've got a nice edge there. And look what happens. My mentors taught me that the most important thing you can do is listen to the market, not listen to outside sources. Because once you listen to outside sources, what have you done? You've taken your power away. You've let someone else make decisions for you. Don't ever let anyone make decisions for you. That's why I tell my students, don't rely and ask me what I'm doing, how I trade. We help you formulate your own style of trading. We give you all the tools and techniques and strategies, but then we mold them so that you feel comfortable and you can make your own trading decisions. Now, some of the best trades that you see here are the ones that you never take, the ones you don't take. So this is how the PET D can help you as well. Now, looking at ABX here, we obviously are in a downtrend. At some point, if you were using standard conventional wisdom, you'd be looking for bullish engulfing patterns. And as you see here, we have bullish engulfing patterns all the way down. And none of them would have worked. You would have lost on each one of these setups. But if you applied the PET D, you would have known the entire time not to take them. Why? Because in order to go long, you need one of those bars to be green. And none of the bars were green. In fact, they were both red. So this was telling you, don't take these buy signals. Now, if you had seen a bearish engulfing pattern, unfortunately, we didn't have one here, but had you seen one, well, you would have taken it to go short. Here's another example, CVX, the original example we showed you earlier. We have a downtrend, and we're met with a bullish engulfing pattern. Most likely, you would be taking this as a buy signal, thinking the trend was over. But when you apply the PET D, both bars are red. We need bar number 2 at least to be green, and it wasn't, so you would not have taken this. I'm sure everyone in the chat room would be saying, oh, we got a buy signal in CVX, but you, now being the savvy trader you are, said, no, we have to trade in sync with the trend, and the trend is down, so we do not try to be bullish if the trend is down. And look what happened. Now here again, another bullish engulfing pattern. Don't take it. Both bars are red, and you just bypassed 2 losing trades. How about KLAC? Okay, we have 2 great directions here, a nice upward trend and then a nice downward trend. As we're going up, the bars are green. As the trend changes, the bars turn red. While we were going up, we had 3 great signs to go long. Bullish engulfing pattern, bullish engulfing, bullish engulfing. Okay? Once the trend changed, you switch over. Here's a bearish engulfing. So you see how nice it is to know how simple it is and how confident you can be when you're in sync with the trend. The only trouble is most people don't know when a trend has changed or what side of the market you should be on. We're always taught to pick tops and pick bottoms. How about weekly charts? Well, with Microsoft, here's a weekly chart looking back in hindsight, going all the way back to February of this year. It was obvious to say, well, sure, we're in an uptrend, but how would I have known to go long way back then? Well, if we just apply, we see here that we had a bearish engulfing pattern in March of this past year. Most people may have taken this thinking we had topped out. Well, no, we wouldn't have taken it because both bars are green. Right here in mid-April, we had a bullish engulfing pattern, roughly about 39. Another bullish engulfing pattern around 41, 42. So you had two real nice signs on a weekly basis telling you to be long. Now, had you already been long Microsoft, you could have just used both the PET D and the engulfing pattern to give you confidence to stay in the trade. And this also works if you're trading commodities. Let's look at heating oil. Obviously, we all know that oil has been going lower and lower and lower. But how could we have used this same technique, applying candlesticks with the PET D? Well, as we see here, we have a bullish engulfing pattern. If you would have tried to pick a bottom in heating oil this past September, you would have lost a lot of money there and there. Two bullish engulfing patterns that the PET D would have kept you out of. But here, at the very first week of October, roughly about a month ago, you could have gone short on this bearish engulfing pattern. Remember, we're only looking at one candlestick pattern. You can apply this to all candlestick patterns. It does not matter. All right, so let's look at the E-mini S&P now. We've looked at stocks and we looked at commodities. Let's look at the E-mini. Let's look at a 10-minute chart. This is going back to about 2 weeks ago on a 10-minute chart of the E-mini. Coming into that day, we see that we had a really nice uptrend. Now, most people would say, well, we opened and then went roughly about 20, 25 points higher. This has gone up way too much. We have to short this, okay? This is time to look for a top because there's no way the market can sustain this nice rally. So what I want to do is I want to make sure that I'm going to look for some type of top here. And it looks like we've reached some type of top. And in fact, we had two bullish engulfing patterns. So how would we have known to stay long? We just apply the PET D. Both of the bars are green in both of these. So anyone trying to pick a top now would be in trouble because not only is the PET D telling you the trend is up, but you also have two signals coming from the candlestick pattern telling you that we're most likely going higher. And so the market went up about another 5 points. But then it started to pull back, as you see here. As it pulled back on this day on a 10-minute time frame, all the bars remained green. Very good sign telling you that even though we were selling off a little bit, we were still green. The trend is still up. You were met with another bullish engulfing pattern right here telling you time to get back in, and it went higher. Now at this point, someone would say, okay, boy, I've had a great profit. I've made about 15 points in the E-mini, unbelievable day. But I can't stand it anymore. I see a bearish engulfing pattern. I've always been taught bearish engulfing patterns are a reversal, and we've gone up tremendously. I can't stand it. I've got to short. No. Why? Because both bars are green. Now, if one of those bars was red, if bar number 2 was red, okay, I would say sure. That's a little bit more advanced, but that's okay. You can take that short. But both bars are green, so we do not short. At the very least, we just say, listen, if you're long from here, just move your stop up, maybe below this pivot or something. And it would have been a great idea because the market went up higher until the end of the day. How about on a tick bar chart? Here's a 2000 tick bar chart from last week. The market was moving higher, all right? And we have 3 different patterns here, okay? We have a bullish engulfing, a bearish engulfing, and then another bullish engulfing. Which one should we have taken, or which ones should we have taken? Well, all we have to do is make sure that we're in sync with the PET D, and that gives us the confirmation to take the setup. So we apply the PET D, and bar number 2 is green on this bullish engulfing, so this is telling us it's okay to be long. Here's a bearish engulfing pattern. Both bars are green, so we're going to bypass this. We're not going to look for a top here. Then we're followed by another bullish engulfing pattern. Both bars are green. So the entire time, we would have just taken this first setup and this one. And the market went higher. And one of the best things is that many times when the market is going higher, it will continue to give you signals along the way. These are all bullish engulfing patterns as you went higher. Now, I'm not going to just sit here and show you how every trade works, we know that it's about consistency. 2 steps forward, 1 step back. From time to time, you will have relatively small minor losses. That's just natural. And I'm going to show you that when you do come to that transition where you're changing from one trend to another, many times you'll get in this kind of whipsaw and you will have some minor losses, as in this case right here. Now, as we see, we've had a really nice run up in this day, and we're met with a bearish engulfing pattern. Once again, out of the 2 bars, bar number 2 should be colored red. All right? If both bars aren't going to be red, at least bar number 2. Well, both bars are green. So this means we're not going to go short. We remain long from hopefully somewhere down here, okay? 1949 roughly, 1948, 1949. So we're still long, and look what happens. We go a little lower, but that's okay. This is just a pullback, and we have another bullish engulfing pattern. So you remain long. In fact, you may even want to buy some more because you think the day's going to end with a nice rally to the upside. So you buy some more, and guess what? Now we go lower. So you're starting to think, boy, are we changing trend? This is tough. The stuff isn't working after all. Remember, all we need is 1 bar, bar number 2, to be colored either green or red. Now, if we look at the next pattern, we have a bearish engulfing pattern. So this is where you have to be savvy. This is where you have to be part of the process. You just can't wait for a bell to go off or an indicator to tell you what to do. Looking at this, I would want my students to say, well, we've had a really nice run up. These last couple of signals didn't work, and in fact, I now have a bearish engulfing pattern. Even though both bars aren't red, bar number 2 is red, and that's all it takes. So if I wanted to be just conservative, I would maybe move my stop maybe just below here, okay? If I wanted to be aggressive, I would exit my long and then look to go short. Why? Because we have a bearish engulfing pattern, and the engulfing bar is red. All right, so if you would have gone short, look what would have happened. So once again, do you see how candlesticks can really help you? They give you a clue as to the direction of the market, and once you apply the PET D, you really ramp up your odds for success. Lastly, the Forex markets. We have a number of traders love to trade candlesticks with the Forex markets. Okay, let's look at the dollar-yen on a daily basis. This is about a month and a half ago in September. Obviously, the dollar-yen was going higher. If we applied the PET D all the way back to August into September, coming into October, we would have seen that all the bars were green. How could we have taken advantage of this nice upswing? Well, just using one candlestick pattern. Look at all the bullish engulfing patterns you saw right here. 4 in 1 month, okay? If you weren't lucky enough to take advantage of this one down here, you had another chance here, and then another one, a couple of chances right here. And then look what happened coming into October. How about the euro dollar? The euro dollar has been just literally going lower and lower and lower. If there were any way you could have gotten in close to the top of this nice major move to the downside. But if we look all the way back to July, coming into August, we see that once the tops were made here, we had 2 bearish engulfing patterns. We had a bearish engulfing here and another here. But this still is not enough information to take that setup to go short the euro dollar. It wasn't enough information. We had to know that we were in sync with the trend. If we want to go short, regardless of what the pattern is in a candlestick pattern, we're only looking at bullish and bearish engulfing patterns now, but it wouldn't matter what candlestick pattern or even what strategy we're using. But the last bar in the setup should be colored red. If you can't have both bars colored red, bar number 2 should be colored red. So if we apply the PET D, we see that in setup number 1, well, bar number 2 was red. It's valid. And in setup number 2, both bars were red. So this gave you a great clue to go short the euro dollar all the way back to July. This was months ago, all right? And you had a really nice move to the downside. Now when we get down to the bottom here, we have 2 bullish engulfing patterns. All right, conventional wisdom would tell us, well, we've bottomed out, time to get back in. Time to go long, cover your short. Why? Because the trend is still lower. We're not going to be out of sync with the trend. Remember, we want to be in sync with the trend. So we don't use these buy setups. We continue to be short, we remain short, and look what happened. And all the time the euro dollar was going lower and it's literally racking up thousands and thousands of dollars on the short side, you got signals to go long here. As you see here in green, here was another bullish engulfing pattern. Not going to take it because both bars are red, but you could have added to your position to go short, bearish engulfing patterns, all the way down. All right, so let's recap before we go into question and answer period. Remember, only buy or sell candlestick patterns, and this is any candlestick pattern, regardless of what it is. We just went over one today, but only buy or sell the candlestick patterns that are in sync with the trend, okay? You'll really increase your odds for success tremendously if you are in sync with the trend. Imagine you're, on vacation and you're swimming and you jump into the river to go swimming. Are you going to have a much more pleasurable experience if you swim against the current and try to swim upstream, a heavy current there? It's going to be tough after a while. You may go upstream, but it's going to be tough. Wouldn't it be much better to have the current at your back and you can just glide down the river and have fun? That's the same way with trading. Sure, every once in a while trying to buck the trend will work, and you'll put in a lot of time and energy trying to squeeze out a buck or two, and it'll work from time to time. But you're going to be exhausted, and you're not going to really reap the fruits of your labor after all the hard work you've put in. It's much easier just to have the trend at your back, just like having the current at your back. Now here's the bonus. Not only does it work on candlesticks, but it can also be applied to any strategy. So let's say you have a strategy that is based off fundamental news, okay? Let's say it's based off of earnings reports. Let's say it's based off of economic indicators or jobless claims, whatever you want. Let's even say it's based off of the full moon. It doesn't matter. You can still use the PET-D to confirm. Now, one of the most common emails I get and questions is, Steve, I love your stuff. I love it, but I haven't been trading long enough, or I've been trading for ages and everything I use doesn't work. The strategies don't work anyway. I've gone to other presentations, I've purchased other material, and there's no consistency to it. So how do I know that this would work? Well, here's the beauty of it. We have a very consistent strategy number 4. And once you apply it with the PET-D, you have tremendous consistency. We have so many traders, so many students of specialist trading that swear by this. They call this our dynamic duo, because once you apply these two together, you have increased odds for consistency, and the best thing is they can be applied to any market and in any time frame. So you're buying a strategy that you can virtually use anywhere. It's that good. I was first introduced to this strategy on the floor of the exchange, and I currently use it on a daily basis myself with the PET-D. All right. Now, it isn't a candlestick strategy, so I don't want you to think that, but I'm going to share with you how it looks in candlesticks. And sometimes it will match a bullish or a bearish engulfing pattern or a doji or a harami, but other times it just won't. You'll just generate a signal based off of its proprietary strategy rules. So let's look at some recent signals that happened within the last month or last week. Here is ROST. As we see here, just about 3 weeks ago, the stock was really doing nothing. In fact, it looked as if it was going lower. But on this day, we generated a buy signal. Now, this is just the strategy itself, strategy number 4, according to its proprietary rules. Now, you could take the signal, and you'll have a nice, moderately high level of success with it, consistency. But once you apply the PET-D, that will give you the confirmation of whether you should take it or not. So we want to see the setup day colored green if it's a buy signal. So we apply the PET-D, and we notice that all the days are green. So this is a valid setup to go long. And look what happened in ROST. The PET-D gives you that confidence to take the trade. How about an ETF, the QQQs? Now, going back to end of September into the mid to late October, we had 3 signals in the QQQs. Now, you could use this either actually to trade the stock, or you could use it as a market timing device. But we had 3 signals. Now, there was a buy signal at the end of September, and obviously this one didn't work. Okay, as you can see here, you would have purchased it on this day, and it went lower. You most likely would have been stopped out. The second signal to go short worked tremendously. And then the last signal, just about 3 weeks ago, didn't work out either. You would have been stopped out with a loss. So you have only one out of these 3 signals work. How could we ramp up our odds for success? Well, we applied the PET-D. If we get a buy signal, we want to see the setup bar green. If we get a sell signal, we want to see the setup bar red. Okay, so this buy signal should be colored green. It was colored red, so we would not have taken that. The sell signal was colored red, so this was a valid setup to go short, and you would have reaped the rewards. This last sell signal was colored green. It should have been colored red, so you would have bypassed this signal as well. So out of the 3 signals in the QQQs this past month, you only would have taken one, and that would have been a nice big winner. How about E-minis? Okay, a 10-minute chart. Here's a buy signal. This was on the 28th. This was just last week. Excuse me. You can see here coming into this day, it doesn't look that there's much range. Nothing's really going on. The range is going sideways. Now, it looks like a bullish engulfing pattern, which it probably is, but remember, strategy number 4 doesn't base its signals off of candlesticks. It's something else altogether. It just has about 5 simple rules. But it generated a buy signal. Now, you may have said, well, gosh, how do I know I should take this signal or not? Well, we just applied the PET D, and we want to see that buy bar colored green. Well, it was colored green, all right? So that gives you the confidence to take the trade, and it was a good trade. How about Forex markets? Once again, we look back at the Australian dollar. We have 2 sell signals using strategy number 4, all right? The first one at the end of August would have probably turned into a minor loss. If you had gone short on this bar, it would have looked like you were starting to make some money, but then you would have gotten stopped out. But then you had another one at the beginning of September, all right? Which one should we have taken? Well, we add the PET D, and as you can see here, this sell signal should have been colored red. It wasn't, so we didn't take the trade. This sell signal was colored red, so you could have gotten short at the very first or second week of August, or September, I should say, in the Australian dollar, and look what happened after that. The PET D is a great tool, once again, I was introduced to on the floor, that is not a strategy. It's not a system. It's just a proprietary tool that gets you in sync with the trend. All right, so let's recap. We shared with you the secret to being successful with trading candlesticks. It's always being in sync with the trend. So even if you want to use your own method of being in sync with the trend, that's fine. We feel you'll still do well, regardless of what strategy you use or what you use to apply trend. But we feel the PET D works better than anything we've ever seen. All right? And then if you don't have a strategy, let's say you don't have a candlestick strategy, or let's say you don't even trade candlesticks, you just want something to trade with because you've lost your confidence in whatever you've been using, we shared with you strategy number 4, which is a very simple strategy to use. It's our most popular strategy because of its consistency and the way it can transfer over onto any market, any time frame. But how once you apply the PET D, you also increase its odds for success. So many of our members love this. They've coined it the dynamic duo because it works so well together. Now, as we close here, I just want to take a second to share with you how you can get both of these together. We're going to give you this 2-for-1 attendee special that we run from time to time. This is strategy number 4. You get all the rules, all the detailed instruction, 5 videos. It's an online course, entries, exits, and stops, signal alerts, weekly video trading lessons, and this includes both add-ons. In other words, once a buy signal is generated with strategy number 4, you'll get a buy or a sell arrow on your chart. You also get the add-on for the PET D, which we just shared with you, so you will be able to color all the bars, either green or red. All of this is included, all right? We would usually have this for close to $2,000. That's how popular both of these techniques are. But we've discounted it for this 2-for-1 attendee special down to $14.95. Now here's the best thing about this discounted price. We realize this still may be a little bit too expensive for some people to meet in one lump sum. So we now have payment plans in our format, so you can structure any type of payment plan with one of the trading consultants at Pro Trader Strategies. But this is for a limited time only to get this special discount with a payment plan. So you saw how well strategy 4 works. You saw how well the PET D works. Once again, this is your chance to get both of these great techniques for trading, things I use myself on a daily basis, for a minimum of $14.95. And with a payment plan if you so desire. Now, for more information, you can contact our sister site, that's Pro Trader Strategies. They market and promote all of my different courses, all of my techniques, all of my strategies. And so contact them at trading@protraderstrategies.com. You can email them and a trading consultant will help you. They'll put together a payment plan with you. Or you can call them directly at area code 310-598-6677. And they'll structure it all for you. So you can be up and running as early as today if you like. We have a great tech support system. If you have a specific platform, they can help you apply all this and help you put it together. So if you're not computer savvy, someone will call you up and help you put it all together. So it's a really great program. It's what I use on a daily basis, and I really feel it'll take your trading to the next level. Now, I want to thank you all for waiting. I'm sure we have some questions. Let me open up the question and answer box here. And let's see what the questions are. Someone says, what is the name of the software you're using? Ron is asking. Well, we use 4 different softwares. The platforms we use that all of this works on is NinjaTrader. It also works on TradeStation. These trading techniques also work on MT4 and Metastock. So you can apply these to all of those different platforms, okay? Also, you can apply it to Thinkorswim as well. I'm sorry. There's a special way in which to set it up, and the trading consultants will help you if you happen to have Thinkorswim as well, okay? Does your indicator colors the candle? Yes, it does. As you saw right there, Mahmoud, I'm sorry, it was coloring the candle. So we show you how to set up the candles and then how to apply the PET D so that you can look at the candlesticks, have the open and closed body, and then have the PET D with it. So yes, it does. Brian is asking, was this recorded? Yes, it is, Brian. If you want to get the combo, or if you're interested, just contact the information you see right there, and they'll send you the link to the recording. TN is saying the greens and reds are confusing on charts. It is not like this. Well, that's because you don't have the PET D. Once you have the PET D, it will color the charts either green or red. So we can configure the chart so that you're able to still see the candlesticks as we just showed you. And the entire presentation I just gave was in candlesticks. It's just that for some reason, you've been set to using them in a separate way, but this is where we want you to become a part of the process. You should be able to mold so that you can see these things so that you'll be able to trade. We don't want people to get so set in their ways so that they say, well, no, I have to look at candlesticks this certain way or this certain way. If you have opportunity in front of you, all you have to do is make a few minor changes, and you'll see the candlesticks are still there as we showed you this entire presentation, but you have a color bar algorithm as well. TNS, when you said both candles must be green to go long, are you saying so from a software vantage point of from normal charts? Well, they must be green. The PET D, I think you're getting confused with the PET D, TN. The PET D is a color algorithm. Remember we stated if the bars are green, you're in an uptrend. If the bars are red, you're in a downtrend. So therefore, when you get a candlestick pattern, you want to see the bars green if it's a bullish pattern. You want to see the bars red if it's a bearish. It's that simple. As I stated, simplicity equals consistency. Don't overcomplicate your trading. If the bars are green, you're in a uptrend. If the bars are red, you're in a downtrend. And then just apply a pattern that goes in that direction. It's that simple. Let's see. What do you mean by the PET D? Is that a software? Yeah, the PET D has Tiana. I think you're having trouble with what the PET D is. The PET D is simply a tool. It's a add-on that you add on to your trading platform, and it colors the bars green or red. Okay. Mahmoud asks, is the PET D an indicator? Yes, it is, but remember, it's a trend identifier. Rather than, a lot of people say, it's an indicator, and it could fall under that category. I don't really like to call it an indicator, Mahmoud. I like to call it a trend identifier, because a lot of people define an indicator as something that helps you and tells you where to buy and where to sell. The PET D doesn't really do, its main job is to tell you the trend direction. So although it can, and we show you ways in which to use it for trading, its main purpose is to tell you the direction of the trend. That's what we're really looking for, okay? Let's see, TN, yes, the PET D is a software that you must buy. That's the promo we're giving today, and that is the offer we have, the PET D today, TN. On NFX, the second bear engulfing, if you applied the PET D, would it be red, Dennis? Dennis, I don't want to go back there, but as you saw, yeah, we applied the PET D, and as you can see, I'm trying to remember that actual chart. If I go back, well, it'll take a while to go back to that slide, probably about 50 slides. All you have to do is request a link for the recording, and it'll share with you. But if you had a bearish engulfing pattern, remember, you just want bar number 2 to be red. That's the minimum. If both bars are red, that's even better. For a bullish engulfing pattern, you want bar number 2 to be green or both bars to be green. And I believe in this example you're talking about an NFX, the engulfing bar was red, so that was a valid pattern. Okay. Alexander is asking, how is the PET D different from the Heiken Ashi? First of all, I'm not familiar with the Heiken. I mean, I know what the Heiken Ashi is. I don't use it. The PET D was something that was introduced to me roughly 35 years ago when I was trading on the floor. It's based off of momentum, and it's a proprietary algorithm that you have to calculate. I believe the Heiken Ashi is based off of entirely different. It's based off of open, high, low, close. I'm not really sure, or price patterns. This isn't based off that at all. It's based off of a momentum tool, and all you have to do is make a calculation. Now, when we use this on the floor, because of things were so antiquated 35 years ago, we could only use this for daily bars, because you had to, at the end of every day, come up with a calculation that took maybe 2 or 3 minutes, and it would tell you, okay, well, we're still in an uptrend, we're still in a downtrend. Whereas now we have high-speed computers and programmers, so we can do this for tick charts if we want. So it automatically takes this algorithm, this calculation of the formula, and will color the bar either red or green. So it's not based on any type of chart the way I believe Heiken Ashi is. Okay, so they're not similar at all. Let's see what Pam is asking. Do you trade commodities with these? How successful? Hi, Pam. No, I personally do not. I showed you heating oil, but we do have some members who do trade commodities with these. We have people giving us testimonials almost on a daily basis saying how they trade gold with this, how it works. In fact, if you want to look at the gold chart, I mean, this gold has been red and silver for weeks, if not months. The PET D could have helped you tremendously. Plus, there were tremendous amounts of bearish engulfing patterns on a daily basis. Also, people trade crude oil with this. They also trade T-bonds with this, a lot. And there's a lot of different commodities that people swear by using this. I personally do not trade commodities, but we have enough people in our courses who do that just love it. Okay. How many bar back does the PET D evaluate? With giving that, Dave, if I gave that, I would pretty much be giving away a little piece of the puzzle. I don't really want to talk about that too much because it is a proprietary tool, and we do have hedge funds that are interested in purchasing this. So I don't really want to, give away the rules. All I can tell you, it's based on momentum. And another thing I can tell you is that it does not optimize itself. In other words, once a bar closes, it does not rechange the color. If it closes, let's say we're looking at a daily bar and it closes red. After 10 or 12 more bars and with different price action and volatility, it's not going to re-optimize and change to green. It will always stay that color. The only time the bar may change color is while it's still active, meaning that it has not closed yet. All right, so if we're looking at a daily bar and let's say you have an up day, a really nice strong up day, let's say the bar could be green. But then perhaps something happens, some event, or just the market falls out of bed and it starts to head strongly lower, well then the bar may turn to red. But once it closes, that's it. It never changes, okay? So I don't want people to think that this tool will change as you go forward or whatever. It does not, okay? But I'm sorry, I really don't want to get into days back or what it's based off of or what type of indicators it uses or what type of momentum, because then I would be opening up a whole can of worms there, okay? Razif is asking, as for Forex trader, which strategy would you recommend to apply with the PET D? Well, Razif, I would probably apply our most consistent strategy, which is strategy number 5, okay? That's based off of a candlestick pattern, okay? And it's probably generated the most consistent results going back about 3 or 4 years. Strategy number 5 with the PET D works tremendously. In fact, we just had a great trades in going short the Australian dollar and the British pound using both of these to go short. Really nice trade. As well, we had another great trade going long the I believe it was the dollar yen. So there's a lot of great signals using it and applying both of these. Okay. Let's see. Jim is asking, what type of guarantee is there? Well, Jim, we offer a 30-day exchange for any other product if you aren't happy. We're giving you, see, once you buy our products and our knowledge, you're getting all the knowledge and everything I've accumulated for 37 years. So I'm giving you everything. I'm sharing with you all the rules to the strategy. You're learning all the techniques, all the ways to trade it that meet your needs. In other words, trading it conservatively or aggressively, all the indicators that you want to use. And then once you get it, if you're not happy, we want to protect our knowledge base. So how do we know that you're really not going to just, use it and say we're not happy and then want a refund? It's not something we can turn on and off. This is yours to keep. We can't undo the education you've just learned from 37 years. So what we do offer all our members, if you're not happy or if it just doesn't get in sync with your method of trading, we'll give you 30 days to exchange for any other product that we may have. We have upwards of 10 different strategies for different markets, different time frames, and different ways in which to incorporate trading within the market. So you can do it that way, okay? So Dana's asking about that. Yes, we just went over the no refund policy. George is asking, can you demo the PET D to today's ES 5-minute chart? I'm sorry, George. This is not a dynamic presentation. This is static. I just have a PowerPoint presentation, so I don't have a 5-minute chart up there. All I can tell you is that I was using it today on a tick chart and it worked very well, extremely well. It kept me in the rally that we had today. Okay. Kumba asks, can the PET D work on Option Express platform? I'm not really sure. That would probably be a great question to call up the Pro Trader Strategies and they can let you know if it works on that. I'm not really sure, Kumba, but there's a good chance it may. I'm not sure what platform is applicable with Option Express, but many people have asked me this in the past. I'm not sure, and then they contact the people at Pro Trader Strategies, and then they've set them up, so it works perfectly. What kind of support does Pro Trader have? Pro Trader Strategies is great support. We have a tech team that I believe is fantastic. They'll call you up and they'll go over and teach you how to put everything together, to put up the screen and apply all the tools so that you can have the setup the way it meets your needs, and they'll help you with all the add-ons so that you can be up and running in just a matter of moments. Okay. Why are some candles colored fully and some only outlines? Because the outlines represent the up days. See, we had the backdrop was white. So when you have the backdrop white, the up days just an outline. Too many traders get used to the way of looking at a dark chart and think that's the only way to trade candlesticks. You have to be flexible. You have to be able, because that way you'll be able to apply the PET D. So if you have a white backdrop, a down day will be dark, will be a black body, and an up day will be an open white body. Okay, so that's it. Once you get used to it, it's very simple, and you'll know that what the candlestick pattern looks like. And if you really want to be traditional, this is the way candlesticks originally looked. When the Japanese traders were using them to trade rice futures hundreds of years ago, they didn't have a black screen and a red down day and an up green day. They just had a white screen, and it was just an outline. Okay, and then they colored the down days black, and they left the up days open. And that's traditionally the way candlesticks were. That's the way I was taught roughly about 25, 30 years ago. Let's see. Muni Raj asks, hi, sir, how do you increase the win rate? Well, even though we don't have statistics, because as I stated, we're an educational company, the way you increase this win rate is by applying the PET D. So let's say you have a strategy and it's okay, it's nothing great, but you have moderate success with it. We really feel that by simply applying the PET D, you'll increase your odds. Why? Because it's a great tool for getting you in sync with the trend. You saw how, in a few examples, I showed you how the trend changed from green to red, how it automatically alerted you prior to where most trend tools would have told you the trend had changed. And so this gave you either the option to move your stop up if you were long, or to get ready to go short if you saw a specific setup. That's the beauty of the PET D. It gets you in sync with the trend. Okay. Roxy asks, I thought you taught the 50 simple moving average as the trend identifier. How is the PET D different? Is it faster and recognizing trend? Hi, Roxy. Roxy, yes, the PET D is different from the 50 period simple moving average because the 50 period simple moving average is the overall trend identifier. In other words, that is referred to as our buy-sell line. That basically tells you whether you're going to be looking to buy or looking to go short. Okay? It doesn't tell you signals, or it doesn't tell you what the trend is within that, because many times you could be in the overall buy setup and then be in a pullback. All right? Whereas once you apply the PET D with that, the PET D can tell you really quickly when a pullback is over. It can tell you the strength of the pullback within the overall trend by, let's say, all the bars continue to be green, as I showed you in a couple of those examples. So the PET D just really fine-tunes your trend identification. It's a great, great tool. Okay, so the overall trend is looked at by the 50-period simple moving average. That basically is just telling you if we're above the 50, we're only looking for buy setups. If we're below the 50, we're looking for sell setups. The PET D accompanied with that can amp up your odds for success by fine-tuning your observation of the trend. Okay. What help does it give us to avoid choppy markets and stay out? This is coming from Dan. Well, one of the best things about the PET D is that if you're in a choppy market, and there was a time today when we were in a very choppy market, we had really rallied coming into the afternoon, and we went and we kind of just stayed there for a while. The PET D will oscillate between a couple of green bars and then red bars, a couple of green, a couple of red. And so because it's oscillating back and forth, you will not get any signal setups for this because it's not having enough bars to validate any type of a setup, at least according to the strategies we teach. So you're basically on the sideline because it's not giving you enough validation to confirm anything because there are no setups being generated. You see, we don't really generate setups in choppy markets. We are only trying to trade in sync with the trend. So for the very fact that there is no trend, you're in a choppy market, a setup will not be generated most likely. Now, we're not guaranteeing this, but most of the time you won't get a setup. So it will keep you out, and there will be nothing to confirm with the PET D. All right? Even if you do get a setup, because the PET D goes back and forth during this choppy time, well, oftentimes it will not confirm anything. So that's another great reason to use this as well. What is the price for the PET D if I've already purchased strategy number 4? That's a good question. We know some people. Thank you, Dale, first of all, for your patronage and for purchasing the strategy number 4. Don't worry, we will not make you pay for strategy number 4 all over again. We can apply what you've already paid for to the combo deal. Okay, so you will automatically get that deducted. So don't worry about that. And once again, we thank you for purchasing strategy 4. Mahmoud is saying or asking, do you mean that in the PET D strategy, 2 steps should be followed then placed in order? Well, Mahmoud, there are different strategies. It depends on what strategy you're talking about. Once again, it could be a strategy you're currently using. It could be a strategy we teach and promote. It all depends on what you're trading. But all we're saying is that the minute, whatever strategy you decide to apply, the minute it gives you that buy setup. Let's say your strategy is based off news and you're waiting for some indicator to come out, some economic indicator. The minute that indicator comes out and you perceive that it's a buy signal, well, that bar should be colored green when it closes, okay? And that's your confirmation to go long. If you think it's a buy signal, but the bar is red, we would advise not to take it because you're out of sync with the trend. That's how simple it is, okay? It applies, Pat, to any time frame in any market. We showed you how it worked on heating oil. We showed you futures markets. We showed you in commodities. We showed you stocks as well as the Forex markets, okay? And we showed you all these different time frames, okay? Dan, hello Dan, he's asking, if we trade options, futures, and Forex, do we get the PET D and strategy number 4 for each market at no extra cost? Well, Dan, that's probably a question better asked by the people at Pro Trader Strategies, but we can make access available for the different markets if you like, okay, Dan? But I would contact the people at Pro Trader Strategies and they can put that and set that up for you. Debbie asks, is there any reason that this would not work with 5-minute candles? I see no reason, Debbie. I used this today, as I said, on a tick chart. So on a 500 and a 1,000 tick bar chart. So I don't see why, that's a much faster time frame than a 5-minute. So I don't see why it wouldn't work on a 5-minute. No, Debbie, I can't give you numbers and figures because we're not a system. We don't teach and trade systems. We teach education, and that's what we give you. So we will be there right alongside with you, but I see no reason in my experience with using this why it would not work on a 5-minute, okay? Razif says thank you, and he will contact. You're more than welcome, Razif. Any questions anyone has, I'm more than willing to answer as best as I can. Kamba asks, can the PET D work with penny stocks? Well, Kamba, I don't trade penny stocks, but just as I told Debbie, I see no reason why. It works with anything where we're trying to find the short-term trend. So let's say you have a strategy that works with penny stocks, okay? You just have to apply the PET D to confirm that strategy. All right. Now, if you don't have a strategy, strategy number 4 is a great strategy to have. That's why we have this combo, because we've done this presentation before with just the PET D, and so many people have written back to us and said, Steve, I love this. It looks great, but it's just a trend identifier. I don't have a strategy to trade with. Everything I've used in the past 5-10 years doesn't work, and I don't have anything to apply this to. That's why we're giving you one of our best strategies to date in terms of consistency, strategy number 4. That's why this combo is called our dynamic duo, because so many people are so happy. We get testimonials all the time. I got one, I believe, a couple of days ago where a gentleman, even though he kind of stated it incorrectly, he said, I've been trading the markets for a long time. This is the best system I've ever traded in my life. And I wanted to say, well, it's not a system because we don't trade systems. But I still took the compliment. It was nice. And he was talking about the dynamic duo, PET D and strategy 4. Let's see here. Could this strategy work for 5 minutes or ticks? Yes, Mahmoud. It works. I personally know it works for ticks and 5 minutes, okay? Debbie, you are more than welcome. It's very intriguing. I know it is. And as I stated, it's something I would not teach or apply something or try and promote something that I don't personally use. I am a trader before, I'm someone giving you a webinar. I trade on a daily basis, and I use this on a daily basis. I use the PET D every day. That's how strong it is in my trading. So I would not, in any way feel comfortable talking about something that I don't use myself. So this is something I use, and it helps me. Now I realize everyone's going to apply it differently to meet their needs. That's fine. That's what we want. I do not want people saying, Steve, tell me exactly what you do so I can mimic that. That's a recipe for disaster. I can almost guarantee you'll lose. But what we do give you is solid education, and we mentor you so that you're going to feel comfortable trading your own way. See, most traders, once again, want to take their signals or the setups from someone telling them what to do. I did that for a while when I first started teaching students, and it was really uncanny because all the students I taught my strategy lost money, and I couldn't figure out why. Because they had the same information, the same setups, and the reason is because everyone was different. Some of those traders were conservative. Others were more aggressive. Some couldn't stay in the trade long enough. Others were too frightened to pull the trigger. So everyone has a different approach. Then I realized that the correct way to teach is to give them the foundation, but then construct it to meet their needs. Once I started doing that with my teaching, I started getting more and more successful traders. So that's what we promote. We do not want you to trade the same way everyone else trades. We want you to give you sound foundation, great knowledge, and then work with you to construct it so that it meets your needs. Okay, so we give you the basics of the strategy, the PET D, but then you may apply it totally differently the way someone else does. Either way, you're going to have nice consistency in your trading. This is what we really feel. Okay. In closing here, Mahmoud asks, how many hours that will you teach your students? Well, once you become a member of Specialist Trading, you're a member for life. So it's not like, well, I'll only give you 2 weeks of correspondence. You get my personal email address, and I'll contact you as soon as possible. Now, I get tens, if not hundreds, of emails a day, so I'll have to answer you in the order they were presented, but I'll always get back to you. So I'm there in constant correspondence with you. So this is a lifetime correspondence. There's nothing where after 2 weeks you can't converse with me anymore. So don't worry, I'm there with you on a daily basis, okay? And BM is asking, you got in a little late. Is this the same as last week? Yes. If you remember, I stated this is a repeat performance at the very beginning because we had such an overwhelming outpouring of people saying that they wanted to see this again. So we're reviewing the same information we gave you last week. So you're kind of getting a really nice deal here, because usually we only run these for once and then we move on to something else. But we're giving you this 2-for-1 special down to $14.95 with the payment plan for 2 weeks in a row, because we realized that a lot of people weren't able to get the first presentation and people wanted to see this again. So in closing here, once again, we're almost at the end of 2014, and ask yourself, how has your trading been this year? If it's not up to where you thought it would be when you first started the year, it's time to make a change and get away from what you've been told works and what is going to make you, 150% a month. get to sound and solid education. That's what we offer. You know, I'm not going to sit here and promise you that you're going to be making a living in the next 2 months, or you're going to be making 1,000% by the end of the year. But what I will promise you is that I will bend over backwards to try and educate you and get you on that road to consistency. That's what we do at Specialist Trading. That's what my mentors did to me that ultimately changed my trading, and this is what I try to do to all of my students. So if you're interested in taking the next step, I strongly urge you to take advantage of this 2-for-1 combo. Contact Pro Trader Strategies, as you see right there. Remember, these programs work for TradeStation, NinjaTrader, MT4, and Metastock. You can also apply them to Thinkorswim, and they will help you set it up. Trading at ProTraderStrategies.com, or call them directly at area code 310-598-6677. Okay? In conclusion, I want to just say thank you so much for attending. Thank you so much for the questions, and I look forward to all of you becoming members of Specialist Trading and the Dynamic Duo course, the PET D, along with strategy number 4. Thank you. We'll see you next time. Bye-bye.